allowance will be taxable. Example, uniform allowance. Normally you will not be given all these things. Normally you will given education allowance, hostel allowance. Normally, okay. I don't think you will get the question based on the other allowances. Maybe at times uniform allowance, tiffin allowance, like that they may give. If at all, if they give like that, whatever I have darkened in the gray, whatever the amount you receive, assume that you have received 20,000 as uniform allowance and you spent only 5,000. 20,000 is the amount received minus 5,000 exempted, balance 15,000 becomes taxable. That is one scenario. You have received 20,000, you spent 22,000, balance taxable will be 0. It should not be negative, it should always be either 0 or positive value. Understood?
Yes.
Next, statutory provident fund. If any contribution made by employer as well as employee both, it is fully exempt from tax. That means if you are working in an organization, employer will contribute to your statutory provident fund and you will also both contribute equal amount in the sense equal percentage. The contribution made by both employer and employee becomes exempt. Normally, this statutory provident fund will applicable only to government employees normally. Next, recognized provident fund. This is most important. Invariably, you will be finding this element in all the questions. Whenever there is a question from salary, this part will be there. Okay. See, recognized provident fund. If an employee contributes to its own provident fund account, that will be exempted in salary from the salary income. Whatever the amount the employee contributes will qualify as a deduction under section 80C. 80C is nothing but there is a separate chapter called as deduction chapters. In that chapter we are going to study what is section 80C. There are plenty of items included in that. This is one of the item which is there in deduction under section 80C. Assume that if an employee contributes 1,500 per month, 18,000 comes to an year. That 18,000 you can deduct as contribution to recognized provident fund under section 80C from the gross total income. This part, for the time being, you leave it. When it comes in the deduction chapters, I will again revisit this part. This part in the sense, not the salary part, the employee contribution part. Okay, there also we are going to study. Next, if employer contributes to the recognized provident fund of the employee's account, that means when you get the employment, in the offer letter they mention this is the contribution will be deducted from your salary by the employer and the equal amount of contribution will be contributed by employer as well to the provident fund account. Okay. In that case, whatever the employer contribution is there, it will be exempt up to 12% of salary and balance is taxable. Up to 12% of salary means, assume that the employer has contributed 25,000 per month as contribution towards recognized provident fund. 25,000 into 12. 12 means 12 months, not this 12. 25,000 into 12, how much?
3 lakhs, sir.
3 lakhs. That is amount employer contribution to RPF 3 lakhs minus exempt. How to calculate exempt? We have to see how much percentage he has contributed to RPF account. For that purpose, salary we need to calculate. Salary for the purpose of employer contribution to RPF will be basic salary plus TA enters into retirement benefit that you need to consider plus commission on sale. You need to add these three. Okay. Example, if your basic salary is 45,000 per month, TA 50% of basic salary, and there is no commission assume. First we need to see how much is your basic salary is 5,40,000. Of this 50% is your DA. Total salary comes to 8,10,000 for the year for the purpose of RPF. Of this 12% you need to see. 12% comes to 97,200. The employer has contributed 3 lakhs. The difference 2,02,800 becomes taxable. Understood? Understood? Not understood? Still thinking how can it be?
So can you explain that 8,10,000 things?
See, for the purpose of calculating whether the contribution made by employer is exempt or not. If so, how much is exempted? How much is taxable? For that purpose, we need to see if the contribution is 12% of salary. Whatever the salary paid by employer to employee, only basic and DA and commission on sale need to be considered to see whether contribution by the employer has exceeded or is well within 12% of the component of these three put together. Okay. Assume that your basic salary is 45,000 per month. TA is 50% of your basic salary. I am just taking an example. 50% of your basic salary. That means if your basic salary is 45,000 per month means for the year it will be 5,40,000. How? 45,000 into 12 comes to 5,40,000. Please keep the calculator handy with you. Okay. TA of this 50% means of this 50% comes to 2,70,000. Total comes to 8,10,000. You need to see 12% of 8,10,000 how much it will be. It comes to 97,200. The employer has contributed 3 lakh to your provident fund account, but only 12% up to 12% is exempted. Anything in excess of 12% is taxable.
Understood, sir.
Okay. Assume if employer has contributed only 90,000 to your PF account, then entire 90,000 becomes exempted because it should not be negative. The taxable amount will be nil. Understood? Pooja, Kusuma,
Yes, sir.
Malini,
Yes, sir. Yes, sir.
Gahana, Raja, Sanjay. Please understand this component because there is still further things to be discussed on this. Understood?
Yes, sir.
Okay. Assume that you are working in this company since 20 years. Just an imagination. Okay? 20 years. If you work for 20 years, assume that yearly contribution is 90,000 only from first year to till here. You would have got some lump sum amounts in your account, right? Around 18 lakhs would be there. Plus your contribution also equal to that amount. Total contribution or total balance in your PF account would be 36 lakhs. This point, not understanding. Assume that you are working in this company since last 20 years. Malini and Gahana and those who are working can easily relate. Those who are not working may not relate so easily. Okay, just imagine since last 20 years you are working in the same company and the yearly contribution from first year it will be 90,000 only for our understanding purpose. That means employer contribution will be 18 lakhs for 20 years. 20 into 90,000 becomes 18 lakhs. The equal amount of contribution would have done by the employee also, so that your total balance in your PF account with respect to contribution part will be 36 lakhs. Do you guys agree?
Yes, sir.
Okay. Of this, it is like bank account. PF account is like your bank account. Normal bank account, SB account. It will be in the government hands. You cannot withdraw the way you're going to withdraw on daily basis in from the bank account. It may not be so easy. You will have to apply for the withdrawal based on your eligibility. They will allow you to withdraw certain portion like that. It will be there. That we are not bothered about as of now. Total credit is of 36 lakhs. That means each year 90,000 would have been your contribution. Of this, if you get interest, whatever the contribution, your contribution and employer contribution, both contribution, on the employer contribution and on your contribution, if the interest comes up to 9.5% is exempt, up to 9.5% of the contribution is exempt. If the interest whatever you receive beyond 9.5%, that becomes taxable. Assume that I have received interest of 12,000. During the year, I have received interest of 12,000. Tell me whether this is exempt or taxable. If exempt, how much? If taxable, how much?
It is excess, sir. 10,800 is
9.5% of 90,000 into 9.5%. 8,550 is 9.5%. Excess is how much? This is 9.5%. This is 12%. This is excess of 9.5%. This is taxable. This is exempt. Understood?
Yes, sir.
Okay. This will not stop here. Further, they have made an amendment. Okay. First, let me go through the provision. Next, interest. I think I have not included, or I have included. Interest portion, I think I have left. Okay. I will include and I will send it. Okay. See, during the Finance Act 2021, Nirmala Sitharaman has made an amendment. Okay. If employee only is contributing, no employer contribution. If employee is only contributing and the employee contribution is up to rupees 2,50,000 in a year, whatever the interest you receive up to rupees 2,50,000 but not exceeding 9.5% is fully exempt. Understood or not? You get the question on this now. Okay. Assume that I will take the name of, with your permission, Malini.
Yes, sir, no problem.
If you become rich, give me some percentage.
Most definitely, sir.
Okay. Assume that Malini is working in a company. Of course, she is working, and hypothetically, she is working in some other company, and her contribution is 3 lakhs per annum to RPF account, and she receives an interest of 45,000. Now, the question arises whether the entire amount of 45,000, whatever Miss Malini has received, is taxable or exempt. Based on this provision, whatever the interest received in excess of 2,50,000 contribution becomes taxable. Understood?
Yes, sir.
Now, total interest received is 45,000 is for 3 lakhs amount. How much is in excess of 2,50,000?
50,000.
50,000. Now you have to break this interest into two parts, up to 2,50,000 and 50,000. That means 5:1 ratio. Is it okay? Just take 42,000, becomes easy. 5:1 ratio. 2,50,000. Excess is 50,000. What is the ratio between these two?
5:1, sir.
5:1. Okay. 5:1 means out of this interest, how much is for 50,000? Just I will take this away so that it becomes easy to understand this side. Okay, I calculated 42,000 total interest received. How much is for 50,000? How much is for 2,50,000? This is for 50,000 and this is for 2,50,000. That means whatever the interest Miss Malini has received, out of that 33,600 is taxable exempted, 8,400 is taxable. Understood? And assume that this is 8%. Only 8% she has received 42,000. Up to 9.4% is exempt. Since there is an amendment, if the employee's contribution is up to 2,50,000 on which any interest received from PF account is exempt, beyond 2,50,000 is taxable. Here there is an case where she has contributed 3 lakhs, which is in excess of 2,50,000. Whatever the interest received in excess of 2,50,000 becomes taxable, though the interest is only 8%. Understood?
So, but for 2,50,000, if you calculate it as
No. I just am telling. Don't do the calculation 8% on 2,50,000. I'm just hypothetically example I am taking. Don't calculate on 2,50,000. Just random number, random percentage, random interest I am taking.
Okay, sir.
Just to make you guys understand. Okay. Assume that her contribution is 2,40,000 only. Okay. Her basic salary is 40,000. DA 20,000 per month. And she has received 25,000 as interest. 25,000 as interest. They will not give the percentage here. You will have to calculate the percentage, how much percentage. These two are the element, basic, DA, entering into retirement benefit. Now you have to arrive. This is 60,000 per month. How much it would be for year? Of this, you need to calculate 9.5%. It comes to 64. I will take 90,000. 80,000. Interest received. Up to 68,400 interest is exempt. Balance interest 11,600 is taxable. Like this. Though her contribution is well below 2,50,000, but the interest received is more than 9.5%. Hence, the excess of 9.5% interest is taxable. You need to check two. One is whether her contribution has exceeded 2,50,000. If yes, how much it has excess, on which how much interest pertains to that excess portion, that becomes taxable. That is one part. Second part, whatever may be the contribution, if the interest is in excess of 9.5% of salary, that excess interest beyond 9.5% of salary is taxable. Understood?
Yes, sir.
Slow voice. Who is that? What about others? Are you guys understanding?
Yes, sir.
Okay. This is one part. Okay. Second one. This is both employer and employee both contribution. Assume that there is only employee contribution. Employee contribution. In that case, the 2,50,000 will be increased to 5 lakhs. That means if only employee is contributing, not the employer, in that case, whatever the interest received in excess of 5 lakh contribution is taxable. Ganga Wagle, who is this? What is this? Employer contribution. In that case, whatever the amount, 2,50,000, it will increase to 5 lakhs. Whatever the interest received in excess of 5 lakhs becomes taxable. That excess portion becomes taxable if only employee contribution is there with respect to RPF. Understood?
Can you just repeat that? If employee contribution is 5 lakh?
If there is only employee is contributing towards RPF, whatever the interest you have received, if the contribution is in excess of 3 lakhs, assume that you have contributed 6 lakhs and you have received an interest of 1,20,000. How much is excess? Contribution is how much is excess?
So 1 lakh.
1 lakh. You need to take proportionate interest becomes taxable. You need to calculate how much is the proportionate interest of 1 lakh. That means this interest multiplied by 5 lakhs becomes exempted. Lakhs becomes taxable. That means 1 lakh exempted, 20,000 becomes taxable. Understood?
So what is the rate of interest?
Rate of interest could vary anything. In this case, normally they will not give the rate of interest. Even if they give rate of interest, assume that example 9% they give rate of interest. In that case also 20,000 becomes taxable. Why? Because the contribution from employee has exceeded 5 lakhs. Whatever the excess contribution made, that is excess contribution is 1 lakh. On that 1 lakh, whatever the interest relating to that 1 lakh you have received, that interest, excess interest will be taxable.
Okay, sir.
Okay. What is the page number? Can anyone tell me? All these things: education allowance, hostel allowance, transport industry working people, 70% of such amount or 10,000 per month. statutory, recognized, unrecognized. We learned statutory and we understood recognized provident fund also. I'll just go through the recognized provident fund. Recognized provident fund. Employer contribution and interest. Tax treatment up to 31/3/2020. I told you, no, there is a amendment in the Finance Act 21. If you guys observe that one, see this one. Okay, earlier it wasn't like this. After the amendment, like this. I don't want to see this one because it is irrelevant for us up to 2020. Tax treatment with effect from 1/4/2020. This is important. Apart from the limit of 12% for employer contribution and 9.5% per annum for interest, there was no monetary limit above which such amount was taxable. Okay, there was no monetary limit, means 2.5 lakhs, 5 lakhs. That one they are talking about. Now these two have been combined with employer contribution to approved superannuation fund and NPS along with the annual interest thereon within the ceiling of 7.5 lakhs. For this, for which they are referring to NPS and superannuation fund. Okay. If total exceeds rupees 7.5 lakhs, then excess will also be taxable under the head salary. That means contribution in excess of 7.5 lakhs is taxable. Information available relating to if the contribution by such person or employee, such person means employer or employee is in a fund which there is no employer contribution, then the limit of 5 lakhs would be applicable for such contribution, and interest accrued in any previous year in that fund on or after 1st April 21 would be exempt up to that limit. Up to this limit, interest is exempted. Beyond that limit, interest is taxable. 2,50,000, 5 lakhs. Have we found in our notes? I mean in our material? In our material means?
Yes.
This, that is the difference. Okay. Please be careful while reading. See, it is clearly given, right? 12.5 lakhs and 5 lakhs. That's the reason why I will be flagging you off whenever I get doubt. I will keep referring to CA materials always, especially with respect to tax. That 7.5 lakhs they have given superannuation fund and NPS. Okay guys, understood? Okay, your PF we will not see because there is nothing much to discuss on your PF. Normally you will not get question on that your PF. Okay, next. Perquisite. It means extra benefit offered by the employer to employee. It may be monetary or non-monetary. Perquisite. Normally it will be given in kind, or if it is given in cash also, that is the extra benefit that will be taxable as salary. salary. Under this leave travel concession LTC. Are you guys able to see or shall I zoom? Now?
We can see, yes, sir.
Okay, yes. If LTC, whatever the amount you have received LTC, if it is within the permissible law or the policy, then the entire amount is exempted. See, if you have received LTC and you have traveled by air, whatever the actual expenditure means you would have incurred 5 lakhs, but the economic class fare will be 3 lakhs. Whichever is less, 3 lakh is less. Assume that you have received LTC at 4 lakhs. 4 lakhs minus 3 lakhs, 1 lakh becomes taxable. Can you able to follow this one? Whatever the actual expense, assume that LTC you have received 4 lakhs and you are traveling by air. In that, you have incurred an expenditure of 5 lakhs for you, your wife or husband and the children. You have incurred 5 lakhs. You will go to Jammu from Bangalore and you stay there for 6 days and you will come back to Bangalore. From Bangalore to airport to some Delhi to Jammu, again their hotel stay, food, everything. From there again Delhi to Bombay, Delhi to Bangalore, again to your home. You would have incurred 5 lakhs total. But the economic class fare is only 3 lakhs. Whatever the actual expenditure you went in business class, 5 lakhs. Economic class fare is 3 lakhs. The least is 3 lakhs. You have received 4 lakhs amount. 4 lakhs minus least 3 lakhs. 1 lakh is taxable. Understood? Everything will be given. You need to apply. Okay. Second one. If you haven't gone through air, but you have used the other mode like train, bus, car, like that. Whatever the actual expenditure you have incurred, that one, or first class railway fare, whichever is less, you will get exemption. The balance becomes taxable. Any doubt in this?
No, sir.
Balance becomes 0, not taxable. Okay. Now, this one you have to be very careful. Which one? Especially transfer, this part. You guys need break? 5 minutes? Quickly you take a break. Now it is 7.